Hello and welcome to BQ Prime. A very good morning to all the viewers and wishing everyone a happy Dhanteras as well. I am Hiral Dadia and you're watching Stocks in Focus. Sula Vineyards, one of the companies we are looking at, profits have jumped 18%, margins have improved significantly as well on a year-on-year basis. Clearly, it's premiumization which is at play here. Let's welcome in Rajeev Samant, founder and CEO at Sula, to understand what's the trajectory and with the festive season coming into 2 quarters, what is he looking at? Rajeev, firstly, congratulations and welcome to the show.
Thanks, Hiral, and a happy Dhanteras to you and to all your viewers.
Thank you so
yes,
much.
festive season has come early to Sula. Lakshmi has visited us, continues to, and we hope that will continue, as well as to our shareholders. Another strong quarter. I want to point out this is our sixth straight quarter of double-digit top-line EBITDA and profit growth as we continue on our journey of focusing on our own brands and specifically our own premium brands. And again, that's what's driven the growth this quarter and taken our EBITDA margin to an unprecedented 31% plus for Q2.
Right. So with this said and done, clearly your own brand segment, good growth coming in there. Premium which is working. The volumes have grown by 13% as well. Wine tourism is also seeing a good pickup from here on. If you see from a revenue split perspective, are you expecting some shift happening there? Though we know that 88% does come in from own brands, but by how much can you increase wine tourism to now?
So wine tourism is on a great path. We've just added a bunch of rooms. We're now past 100 rooms. So we expect to see some decent growth even in the second half of the year. And there's an insatiable thirst from Indians for coming out to see vineyards and understanding this thing called wine, and which better place than Sula Vineyards, which is possibly one of the biggest wine tourism sites in the entire world. So we continue to expect double-digit growth in our wine tourism. And what is so important about that, Hiral, is that's what lays the base for our growth down the road. So, in a couple of years, 2-3 years, these people are going to be our brand ambassadors. They're going to understand more about wine and going to be very comfortable about buying and choosing Indian wine and especially our brands.
Right. Now, all of this said and done, clearly the margins have actually surpassed 30% for the first time ever, I think, for the company. To maintain this kind of an uptick, absolutely. To maintain this kind of uptick, are we on the right trajectory? Because clearly the monsoon rebounded strongly in September, and I'm assuming that augurs well for the next harvest season, which is early 2024 as well. So if you have to put these dynamics into consideration, how are you seeing the margin profile to pan out in 24?
So, Hiral, it's always a big surprise to us as well, because we always say we're going to put more money in the market and we expect, in fact, margins to moderate. And instead, the margins keep going up as you do have a K-shaped, situation going on here where we have many more people reaching for our premium wines, whereas on the lower segment, 400, 500 rupees, some of our wines are even cheaper than 300 rupees. A lot of competition, a lot of discounting. So what's happening is there's hardly any growth there, but superb growth at the higher end, and that's just driving margins higher and higher. But at 30%, I've always said that that's good enough. Right now, what we need to do is drive volume growth and drive more penetration into those parts of India that is still not seeing that much wine consumption, but where there is a lot of interest, and that's where the growth is going to come from in the decade to come.
Right. So when you talk about domestic market expansion as well, which are the geographies that you think you will be penetrating in the next 12 to 18 months? And to do that, will additional capacity be required?
So I want to point out a real success story for us in this quarter, and in fact in H1 has been CSD, canteen stores. Huge growth, triple-digit growth, in fact, in our sales of wine in canteen stores. So clearly there's a segment, our 4Gs developing a taste for wine, which is, great news, because everyone always thought that these are, whiskey and rum drinking troops, but in fact it ain't like that. You got a lot of people reaching for a good bottle of Indian wine. So that's been our fastest growing geography. Well, you can call it a geography segment, you can call it off H1, and it just shows that our reliance on our biggest market of Maharashtra is starting to decrease, and other geographies within India are showing better and better growth. Haryana has been a terrific tale for us as well. Lots of people in Gurgaon reaching for a glass of our Sula Shiraz Cabernet, India's best-selling wine.
Right. So again, in terms of expansion, but which geographies will you be expanding to, just to understand, where is it and how much market share will it garner then?
So we're talking about, when we talk about geography, we're talking tier two cities. So until now, our focus has been very much metros. Now we're talking about tier one and tier two. So obviously the states remain the same, but the focus has to go out of those, big, nicer stores in tier one, getting our wines into all those places where, some of the IMFL big brands, which could be costing the same as our wines, are available across the place. And wine is still something that's very new. That's really going to be our focus. So whether you talk about UP, that's a big focus area for us. Haryana pushing beyond Gurgaon, UP pushing beyond Noida and into Lucknow, for instance. That's of course that's not tier two, that's tier one. But those are the kinds of places that I would talk about.
Okay, so from capacity perspective, if you have to look at Maharashtra as well as Karnataka put together, if I'm not mistaken, it's around 16.7 million liters. Any expansion plans? Where does the utilization stand currently?
So I must say that we have already put in, about a year ago, a huge new facility in Maharashtra with a capacity for 6 million liters. However, we just did the civil construction, and all we have to do time to time is add tanks to that. So I think this year, in fact, the tank addition is going to be less than 1 million liters because we did a big capacity expansion last year. But, we on short demand, we can just put in tanks. Civil construction is already done and waiting. So we are doing a little bit of build out at Bangalore in domain Sula, and a little bit of build out in Nasik at our domain Dindori facility.
Right. Rajeev, clearly from a consumption perspective, a double-digit volume growth is what we're already seeing. Plus, if you talk of price appreciation as well, how much could that be over the next 6 to 12 months, or you think prices can still remain stable?
I think we are taking price. If you look at our elite and premium range, volume growth has been 13% in this past quarter, and the value growth has been 15%. So there's about a 2% again price increase. That's very much in keeping with what we're seeing. We're seeing about 2 to 3% price increase in those free pricing markets, which is very viable for us because we haven't seen that much inflation in our basic inputs, which are our grapes, where the prices have remained pretty constant for the last 5 or 6 years. So 2 to 3% is the price mix improvement that we think that we're going to continue seeing for the next 2-3 years in terms of the premium and elite. In terms of overall, we're talking about more like 5 or 6% because we're also moving away from the cheaper wines to the more premium wines. So it's really 5 or 6% easily of price over volume.
Right. So Rajeev, my last question coming to you is overall, clearly if you have to look at FY24 as a year, say around 600 to 700 odd crores is what you're aiming for? Or do you think it's going to be easy? By when do you hit the 1,000 crore milestone in terms of revenues?
So I must say that 1,000 crores is right now not on our radar. It's going to be a couple of years out. Something closer to 600 crores is probably what we're looking at, but with a very healthy margin. So a great PAT growth, great EPS growth, shareholder returns.
The EPS, in fact, this quarter itself has grown around 14.2%. So 2.74 is what we're tracking in terms of EPS as well, if I'm not mistaken. But that's a good story that is brewing. And I think the consumption with regards to wine is also increasing. I think, and the best part about this is with wine tourism, the information, the knowledge share that's passing around as well. That's one of the key experiences that people want to pick up. And after understanding, indulge into something like this. But thank you, Rajeev, for putting up this entire end-to-end product together as well for the consumers, because that's what completes a product as well. Thank you. Stay safe. Speak to you soon again. So that's the story with Sula Vineyards. Clearly, good numbers coming in terms of this quarter. Third quarter will also see a good impact with regards to where the festive season is concerned, as well as you have the World Cup, which is there. So clearly, it's going to be interesting to watch out for how the third quarter pans out. But 600 odd crores is what they are eyeing in terms of FY24, and the margins are expected to remain absolutely strong, as Rajeev was mentioning. But moving on, another stock that we have been watching out for is GMM Pfaudler. Let's quickly look at a GMM Pfaudler as well, because again, on the back of earnings, the stock has been in focus. Let's quickly run you through the numbers. The revenues are up around 20% on this counter. The margins have seen a slight dip of around 7 basis points that has come in there. And the reported profit is down around 27%. In terms of the order intake, that stands at 626 crores, whereas the backlog is around 1700 odd crore rupees for the company. Overall, if you see, apart from this, in terms of the segments, technology, systems and services, 3 segments that they have been catering to. India business, the revenues have seen a growth of around 6%, though the order backlog has seen a downtick. Overseas business, the revenues are up around 25%. On the order backlog is also down around 15%. Let's welcome in our guest to understand what's not worked, what's the trajectory going ahead. Aseem Joshi, CEO of GMM Pfaudler, joins in. Aseem, good morning and welcome to the show, and wishing you and the team a happy Dhanteras.
Good morning. Thank you very much for having me on the show, and wish you a happy Diwali and happy Dhanteras as well.
Thank you so much. Aseem, my first question coming to you is, has the quarter met your internal expectations? Because clearly, in spite of a growth coming in terms of the top line, we are seeing some crunch specifically from a profitability perspective. What has not worked?
Yeah. So at the outset, you'll recall we had set a FY25 guidance for the entire consolidated company, and we're tracking very well to meet that guidance. As the capex cycles ebb and flow, certainly sometimes there's ups and downs, but overall we're very happy with the way the quarter has gone, and there's certainly areas that we can focus on to improve, which we will do as a management. So I want to reiterate, have given our guidance, and we're happy with the direction in which the company is headed.
Right. For the benefit of the viewers, if you can reiterate as to what is that expected to look like, and what are the key challenges that you could probably face with regards to where the FY25 guidance goes? Because the global environment continues to remain challenging. Though, when I see the pipeline, the opportunity pipeline that you have as well, that remains absolutely strong, right? So, taking both these aspects into consideration, what do you think will probably or could probably be a probable hurdle to meet the guidance?
Yeah, so when we gave the guidance for FY25, we had said we'll be at a 3,700 crore revenue mark, 630 crores of EBITDA, and about 25% ROCE. I'm reiterating, we're happy with the way our company has performed over the past several quarters. As far as our strategy is concerned, we've a declared strategy of expanding our product portfolio. We have expanded, therefore, our products in our non-glass-lined portfolio, in particular with the expansion of our mixing business. Our alloy business also continues to grow well with several key wins. And this gives us a really good balance in our product mix. Right? In the past, we were very heavily dependent on our glass-lined business, which depends on chemical and pharmaceutical industries, whereas now we have exposure to other industry segments as well, and that's continuing to grow. So I think this just sets us up for a stronger future, beyond FY25 as well, so that as a diversified company with global exposure to various industries, we can perform steadily and continue to meet your expectations.
Okay. So if you have to divide this, we'll go to the segments separately, but if you have to divide this between India as well as the overseas business, right? India is still less as compared to the overseas business in terms of revenue contribution. How are you seeing that mix change going ahead? Because at both ends, you are seeing a downtick in terms of order backlog. So taking the order book into consideration, how is that split looking like now?
Yeah, so let me comment on the order backlog first. I think, when you compare last year or certainly even the last 2 years, we had a truly overheated market, really active market globally. And now that has sort of come down to more normal levels. And so therefore, we're not really worried. We have about a 5-6 month backlog in India, 7-8 month backlog in our international business, which we feel comfortable about. Certainly India as a contribution to revenue is smaller than the international business, but the international business covers North America, Europe, really China and the rest of the world. So that's a much larger geography. But India has been growing well, and we anticipate over the next 3 to 5 years with the kind of capital expenditure expected in India, that India will continue to be a growing part of the mix for GMM Pfaudler.
Okay. And from here on, clearly the acquisition with regards to Canadian Mix Pro, how is that expected to augur with regards to margins and profitability?
Yeah, so thank you. Look, we've had a mixing business in India for a long time. Earlier this year, we acquired Mixel in France, which expanded our portfolio and our capabilities in different industries in mixing. And now with the announcement of MixPro, we have a good presence in North America as well. And again, specific capabilities that MixPro will bring once the acquisition is completed. Our intent is clear. We want to grow a global mixing business that can cater to the needs of various segments beyond our traditional chemical and pharmaceutical base. As we expand into other industries and other product lines, we have a threshold that we're very clear on, that these businesses are technology businesses and they are margin accretive, or at least broadly in the same lines as what GMM Pfaudler traditionally has made. And so we expect mixing to certainly continue to grow and to meet the kind of margin expectations that we have set for ourselves.
Okay. So from a milestone perspective, what are the key things that you are looking to achieve from here on?
Well, so the first is, of course, the FY25 number. That's the guidance we had given. And like I said, we're on track to meet it. Thereafter, we will relook at our priorities. We actually are working on our strategic plan again. I think we will come out with a guidance, when we complete our FY25 numbers. But certainly, there's a lot of work to do since the Pfaudler integration, in terms of increasing exports from India, running that integrated mixing business. And there's several other businesses that we have as well. So there's a lot of operational excellence improvements that we're working on. So we certainly have a lot of plans and we're keeping busy.
Sure. Clearly, if you have to look at various segments, right, which do you think will be growth drivers from here on?
Yeah, so if you look at it from a product line perspective, our core is our glass line business. That remains our most important. That's, we expect over time, though, because it has a very specific market that it serves, it will grow, but, it may not grow as fast as some of the other segments like mixing, like filtration and drying, like our alloy business. So overall, I would say over the next 3 to 5 years, we expect our non-glass line portfolio, our systems portfolio and services portfolio specifically in India to grow, to be major contributors to our growth.
Right. In terms of regions as well, I think Europe still is majority in terms of revenues for you, right? In terms of share. Are you seeing that mix change between America, APAC and Europe?
Yeah, so our mix actually, as we stand today, is roughly split one third across the Americas, Europe, and Asia Pacific. Within Asia Pacific, the bulk of our revenues come from India. We do have some in China, but we're certainly looking to see how we can grow there. But right now, we have a fairly nice mix of a third each across the three major geographies. Going forward, we anticipate, as we mentioned earlier, that investments in India will continue to ramp up. And so India, we expect, will become a bigger part of the mix. But look, I think chemicals, pharmaceuticals, and some of the other industries we serve are core industries, and these capabilities will remain in the West. So I think Americas will continue to be a major market for us, and also Europe. While there is a lull expected or currently ongoing in Europe, that we expect Europe will continue to be a major market for us.
Okay, so that's with regards to geographies in terms of markets. If you have to look at the sectors that you cater to, I think chemicals is still one of the major sectors, right? How is the China Plus One strategy helping you as a brand as well to cater to the chemical space? And with regards to pharma and the other sectors, will you see a ramp up happening?
Yes. So as far as chemicals is concerned, the China Plus One is definitely real. We've seen it in the numbers that we've already delivered and in our pipeline, right? So I think we certainly, as a country, are well poised to benefit from the China Plus One. And as a company, because of our unique mix of India manufacturing, global technology, and strong brand and local presence, we are, I think, very well positioned to benefit from the China Plus One trend that is happening across chemicals and actually other sectors as well. Now, as far as pharmaceuticals is concerned, while that has been slow in the past, we're seeing green shoots there. The inquiries have started picking up again. Some of the larger units that we had expected would come eventually. We're starting to see inquiries pick up for that. And so we're hopeful that, in the next 3 to 6 months, we should start seeing that order flow pick up as well, even in pharmaceuticals.
Right. So I think, all eyes now will be on terms of how the company is guiding towards meeting the FY25 guidance and any upgrades that could come in basis the strategy meets that you have internally. Thank you so much for joining us on the show, Aseem. Pleasure speaking to you and speak to you soon again. So that's the management of GMM Pfaudler. Clearly, if you see in terms of where the stock is concerned as well, if you pull up the overall charts on this one, today the stock is under pressure 2.5%. Again, in the last 6 months as well, 17% is the kind of gain. So it has been a pretty volatile ride for the company because from Jan to now, it's been a slight lull and an uptick has started in the month of September for this counter. So let's see if this continues as well. That's all that we have on the session. Thanks for watching and lots more lined up on the other side. Please stay tuned to PQ Prime.
Wishing all the viewers of PQ Prime a very happy Diwali and a wonderful festive season. Have a great year. Thank you.